All right, guys, Sam here with you. It's November 29th, and as it's a Thursday, we're going to do traditional assets. And like I'm telling you every day, we poll our members. That's how these are chosen. First up is look at the dollar, or pardon me, the pound to the dollar. So there are just some great things to just show you here. So we'll get over here to the hard right edge, but just first off, this is just such a stunning example. I just can't resist taking you through this. So I've dialed these median line pivots in right to the tick. All right, just they are spot on. So note what happens here. So we get just an absolutely textbook, one of the best corner pockets you're likely to see. So so here's the 50. All right, so that's why we have a corner pocket, not a golden, but we're right at the 50. So note what happens from this. So here's the algo, the first algo target. We get this reaction. Second algo target, we get this reaction. It doesn't quite make the third, but look, we just gets down there far enough to tag the median line. Now this pivot here, this is June of 2015. This is October of 16. That's almost a year and a half trade. Year and a half. What? Look at this. Why? Excuse me, I'm sorry, guys. This is why you have to. This is what makes this so hard, right? So you looked at you set that up and you're thinking, oh, okay, well, what did I get there? I got 4-1, great, right? So I hit the algo target. Maybe it's going to second target. Holy shit, I got 6.78 to 1. Where do we all the way get down here? What do we get there? 24 to 1. 24 to 1. Right, and the original stop was just on the other side of the 65. Right, how would you know? Well, there are tells, right? There are tells. So first thing, so as we get this, as you make the first algo target, of course, the immediate observation is we didn't make the median line. So it would be easy to think, oh, wait, I know from, well, if you remember, you know from trading principle number 4 that a failure to make the median line sets up a move equal to or greater than the swing that brought it down or up, as the case may be, that failed to meet it, failed to make it, right? So you'd be looking for a move equal to or greater than that swing. Well, what happens here? Well, we run into another 50. So we grab this pivot to where we hit the algo target. Well, yeah, you get a wick through it. You know, is it running into this? Probably just hitting this prior support, getting kicked in here. Now we fatten it up here, right? So you can see right into the pocket. Down we go again. So you're looking at that and you're thinking, oh, okay, well, I know what happened. We didn't get a swing equal to the prior swing that failed to get there. So down we go. So now you're looking at this going, oh shit, man, I got 2 in a row. Here's another one. Here's the second target. Oh, failure to make the median line sets up a move equal to or greater than the swing that failed to get there. So what does that mean? So we got to look for a minimum of this, minimum there, right? We don't even get close. Rolls over. So eventually, by just staying with it, by having that knowledge to work from, as long as these swings stay, right, we don't get a monster trend reversal, right? The odds are, remember, this is 80%. I tell you this every time I get the opportunity. That's the best odds in trading. Corner pocket, right? Took a year and a half to get there. 24 to 1. I can show them to you all day long. So of course, when you're here, you don't know that's happening. All right, all you're doing is going, hey, I got a swing high, swing low. There's a 50. Well, so as soon as you get the 50 and we get a reaction off of that, then you can draw the median lines. Tough to stay with it for a year and a half, but that's a great example. This is the whole game in FX. So number 1, I would tell you to stay 4 hours. I'm so sorry. Allergies here in Austin are so bad. But back to my point here. So I would tell you 4 hours and above in FX. Now, so I should have mentioned this here. So one of the things that's happening with we're now a year into our crypto bear, and so as so many people, particularly that are either subscribers of mine here on YouTube or our members, as we struggle with this year-long crypto bear, as I kind of try and just tease you with the idea, or at least get you thinking of it. So all of you guys that are crypto only, I have phrased it this way in a lot of crypto: it's too late to sell. perhaps too soon to buy, right? And so again, if you're scalping out little $100 swings in Bitcoin, well, more power to you. But my point being that there's so much opportunity, and the methodology that we're teaching is so effective in, well, it's effective in every asset class, but it's particularly good in Forex, where it's all algo driven. It's all big bang. It's very algo driven. Yeah, we have a lot of retail in here, but that's who, your banker's got to make his Lambo payment. So I'm just trying to preface the idea that we've done now expanded a whole new set of training videos on Forex. So if you're frustrated with what's happening in crypto, I would encourage you to consider a Forex account just for the diversification. And you can open an account with $100. Not that you're going to get far with that, but you don't need a $25,000+ account to trade FX. You can trade the micros and the minis, and you do it with $2,500. That's a reasonable starting point in FX. So not to digress too far from our analysis here. So let's clean it up here. Just something to keep in mind. I try to mention it when I can, because as far as I'm concerned, the underlying, I could care less what it is. It makes zero difference to me. So here, this is, we don't have to worry about liquidity here. We don't have to worry about issues about going short or long or trying to calculate or paying interest on a trade. It's a different beast here. It's much easier to trade, I would tell you, than crypto. But okay, back to the point. So there's a couple of different ways. So with that established, with this just beautiful median line play here, so let me pull this off here. All right, so here, this is a bit of a conundrum here. So this, if we, well, let's go back to the 3-day. All right, so if we look at this in the context of all of this history we have here, well, swing, pivot, so you can guess, I think it was the second one that got it. Did we get it off the, yeah, that's close enough. Could be that there's your front run, likely. Well, that's close enough for a front run. You can kind of see this may have had a factor in it. So here, this front run on the 50 and almost to target. So you look at that and you go, not quite there. Well, is this, is that the difference between this difference here? Well, it's a tough one, right? That's kind of a judgment call. That's a fairly good swing. So you look at that and you think, well, if it didn't get there on this one, right? It's teed up to get there now and get through, right? We're going to have parities down here, and now here's our second target down here. So it's a tricky one. So it looks like you've got essentially a 3-wave structure. So let's look at it this way. If we take the length of this pivot or that swing and project it from here, well, we got through the 1618, so we're kind of in no man's land here. Right, this will take, well, depending on what happens with Brexit, this is not out of the realm of possibility here. So you look at that and you think, sure looks like it wants to go down. It looks like this is the target that's sitting there dying to get met that hasn't been met, right? They'll stay with it till we get that. So that's at first glance what you think, but with a little more analysis here, I'm not so sure about that, right? So I'll show you why. So first thing we should preface here, I know members are interested in this. This is, well, certainly for the pound, I'd be staying daily and above for any trading here, because you have the potential volatility here is dramatic based on how things resolve with Brexit. But that said, right? So if people want to trade here, if you go down to the daily, let's look at this here. So you got to look at this and say, well, from that pivot, so on the assumption that we hit that 50, right? So this was the front run. Well, what do we get coming down? Well, this, right? So it's one of two things. So it's either an A wave or a 1 wave. This is B or 2. This is C or 3. Right, so we have the necessary subdivision here to get an impulse to give us, well, a C or a 3. Now, where it gets a little trickier is if you look here, this move looks impulsive. It does not look corrective. So then you got to look at it and think, well, is that an A wave? Or could it be an A wave? So if you think about the structure you'd be after here, you'd be thinking, oh, is that A, B, C? Well, that symmetry doesn't look great if you think about the size and the length of time of the 2 relative to what that would be as a 4. It doesn't play as well. So then you think here and you think, okay, maybe that's the 4. Maybe it's 1, 2, 3, 4. Well, first issue with that is that it's extremely deep. Now, it is technical. So if I grab the 2 pivot to the 3 low, get it right on there. Well, what do? Right to the golden zone, right to the 618, and then we get the turn. Now, remember, I'm on a daily chart here, so that's an April pivot. That's a pivot in April, and we've had a pretty significant sell-off. So it's, you know, it reduces the probability here that this is a 4, given the depth of that as a 4, right? We know the prime zones between the 23 and the 38, 50 on an extreme. So here, this was all set. It was all right there to be the potential resistance. So you had your pivot, you had the zone here. It was all potentially there, but by blowing through it up here, it makes you look at this and go, well, wait a minute, maybe I've got this all wrong. Maybe this is the 4, if we put that aside. Maybe I've got it wrong. So the 5-wave structure is completed here, or this is just an ABC, and now we've started a new trend. Well, given this action, now that gets a little tougher to lean into. So now you got to break it down. So just for the sake of getting the wave separation here, I'm going to go to the 4-hour and kind of dig into this, and you look at it and you say, okay, well, maybe this is a trend. If it was an ABC, does this look more corrective or impulsive? Well, I can certainly get a 5-wave structure out of this, and it's relatively technical. So I can look at the length of the 1 projected from the proposed 4, right up here to the 1618175. Here's the 618 that it ran into. We can look at the length of the 1 projected from the 2. Now I pull this over here. We're looking for our 1618. Well, am I right on here? Yeah, there we go. So, yeah, there it is. Okay, so you look here and you think, okay, well, that's a deep 2. Look what we do right here. It's the 1618 to the tick. So first thought is, oh, well, there you go. There's the 3. But I don't think so because of this. So if that were the 3, this has to be the 1, 2. Well, if I wick this off, you can see the problem, right? So we can't have 1, 2, 3, 4, or so then you think, okay, maybe it's 1, 2, 1, 2. Then that 3 is not long enough. So you just filled with problems. So I push up to this as the 3rd. So then I can get an impulse in that, and then I think about, well, how would that fit with the rest of it? Would that make sense? How does that 4 line up? Since I'm doing this after the fact, I can see if I dial that in. So here nice little triangle here right at the 38, and boom, up we go, and we can finish 1, 2, 3, 4, 5. Looks like we get a 1, 2, we finish with an impulse into that 5. So all very clean. So it looks much more like we've had a trend change here because this is a clean 5-wave impulse. Well, what follows, right? That just straight ripped down. So where's the B wave? If the correction were complete, right, where's your B wave? It's just not there. So this is the only thing that's a contender, and even that doesn't make the 50. If I go here to here, all right, we just make the 38. Again, it's not that it never happens. It's just lower probability. So now you look and you think, okay, well, maybe I've just got a shallow B. What's been following after that? Could I be finishing here with a diagonal? Could I have a shallow C relative to that A? Well, it's possible if we open this up a little bit. Maybe we've got a diagonal here. So how would we trade that? Well, this, come here. Looks like I could have an ABC into an ABC into, we'll have to dig into that. So this would have to be your 4, 5 down here. It's not the prettiest I've ever seen. Right, those are pretty dramatic swings for a diagonal here. So we know one thing that can be a tell is technical between the start of the 1 through the pivot of the 3rd. Well, it is, and we get the 786, but that's an extreme for a 4. So what's the alternate? Well, maybe we have it labeled wrong. So sorry. So maybe I just have this wrong. So maybe this is 2 here. Maybe this is all still yet to come. Right, so maybe it's ABC into a 1, ABC into a 2. I suppose we can't eliminate that. So ABC into a 1, 2, ABC. We're still trying to put in some sort of a corrective structure. So it could be potentially now this is A, B, C going into the 3rd before you'd look for A, B, C going here, and then we go A, B, C coming down. So is this a very tricky one? So my first thought is, why be trading in here? There's so much risk with what's going on in the background. Why take the risk here? it's not an unreasonable position to take here, given the lack of clarity here, because this looks much more like an impulse rather than a corrective move. This looks like an A wave, so it gets tough to resolve this in some way that would make sense. So if I go back to the daily and I look at it and think, okay, well, if this is 1 and this is 2, well, we've already broken the 65. We just look here. I think we're through the 786 as well. No, we're not. So we've broken the 65. So we can look at that and think, okay, well, it could be a 2, right? So here's, now we're gonna have to finish that down here. We'd have the 887 as a last stand for a 2. But if this is 1 and we're putting in a deep 2, it's certainly possible. It's certainly possible that we'd want to be looking for that pivot. So if it's a 2, right, we have a range here where we know we can't. So if you're a buyer down here, you might look at something like this. Oh, wrong one. I want the buy side. So if I was buying down here at the 786, and I'm not sure I'm up for that trade. Right, I think the risk is too high here, personally. Right, it's just me. Right, you don't have to do what I do. This is just for me. I'd be very cautious here. I'd want to see a reaction. So if we come down here and we get a pivot in this range, I'd want to see something like that for the anticipation of that. So this would be a trade I'd consider, knowing my stop was that close. Right, then if it is a trend change and this starts to go, well, plenty of time to add online or add on the way. If this is going to trade as 1, 2, and then we go 1, 2 into the third of the third, or shit, it could be the third of the first of the third, right, in terms of where that could be going if it's going up here. So you got just a lot of could be, maybe, not sure, could be this, could be that. So again, there's plenty of choices. Why be trading in something where you're that unsure? Oh shit, let me rephrase that. I wouldn't trade here because I'm unsure. And if I'm not sure, next chart. That's my opinion, right? Just again, it's not about what I would do. It's just as I analyze that, I just think the risk is too high and the uncertainty is too much. It's just too unclear as to where we are in the count. This looks like an impulse, but it doesn't fit with the broader shape. So 1, 2, 3, 4, that doesn't fit as a 4. So what does that mean? Market has not revealed enough of itself. I don't know where we are with any degree of confidence. If I'm not confident about where we are, no trade. As far as I'm concerned, that's just a big fat no trade. Now, we could put one more thing on this just to try and help identify. So, of course, 3 pivots. We're going to get some median lines on it. So that one, now I've got the shift on, or the modified shift on this. Let's get that right on there. Original likely going to be too steep here. Well, shit. Shouldn't say that so quickly. So look here, we get a nice, if this is going to be 1, 2, 3, 4, which I think is unlikely, if we're going down here, now of course the other alternate is that forget about the Elliott count. Here I got a dominant swing, and I've got a golden zone here. So algo does not care about the Elliott count, right? We try and just get behind them. Well, that algo, whatever sold here, right? Again, we don't know who, what. We know it leaves a footprint. They don't give a shit about what the Elliott count is. They're just going to stay short until they get to that target, and it lines up nicely with the median line. So if they tied it to those median lines, that's where you're going to see a reaction. So this will, despite my thinking, I don't like the way that looks as a 4. It certainly could finish that way. Then we're going to have to rethink this, and then so maybe it's 3, 4. So you'd have to play it as A, B, C, which it's possible, right? But look at the 4 relative. Look to the 2, right? So there's your 2. This would be your 4. Right? Rule of alternation certainly is something to consider, but that's just too much, right? That symmetry's off. So I think that plays better as a 1, but we certainly, if we take out this low, well then that count is wrong. So with that uncertainty, my suggestion is let the market reveal more of itself. Let's get through more of the Brexit uncertainty before you're trying to do anything. Now, if we get this breakdown here, that would get my attention. And if we start to rock out of here, right, that would get my attention as well. But right now, why? Right? Risk is too high. All right, guys, that's all I got right there. We're doing a couple of what am I doing here? I think the Aussie as well. So I'll be back with one more.